Silver prices are soaring to historic highs. In 2025 alone, silver has doubled in value, breaking past $60 per ounce, a level not seen in decades. But this surge isn't just hype. The market is facing a serious supply crunch. Investor demand is rising sharply, and silver's importance in technology, from solar energy to electric vehicles, has never been stronger. This combination of limited supply and growing demand is setting the stage for one of the most powerful rallies in silver history, signaling that the metal is no longer just a commodity. It is a strategic asset in the modern economy. Several key factors are driving silver's rapid ascent. Supply deficits. For the fifth consecutive year, demand has outpaced supply. Mines cannot keep up, and much of silver is produced as a byproduct of other metals, limiting how much can enter the market. Industrial demand growth. Silver is essential in electronics, solar panels, electric vehicles, and advanced technology. As global tech adoption accelerates, industrial demand keeps climbing. Safe haven buying. In times of economic uncertainty, inflation, and currency volatility, investors turn to silver as a cheaper alternative to gold, creating massive buying pressure. This unique combination, supply shortages, skyrocketing industrial demand, and investor interest, is creating a perfect storm in silver prices. The market is tightening rapidly, and analysts are calling it a silver tsunami. Wall Street has taken notice of silver's meteoric rise. Bank of America now projects that silver could reach $65 per ounce by 2026, citing persistent supply deficits and rising industrial and investor demand. But that may just be the beginning. If silver holds above critical levels, especially breaking past 50 per ounce, some analysts believe it could enter a dramatically new phase, with prices potentially reaching $100 per ounce or more. This surge is not random. It's a combination of structural market factors, industrial growth, and investor behavior. The silver market is tightening, and those who understand these dynamics can anticipate one of the most explosive rallies in recent memory. When analysts talk about a reset in silver markets, they're not just referring to a temporary price spike. They mean a structural shift, a fundamental repricing caused by supply shortages, rising demand, and market dynamics. Right now, silver is showing classic signs of such a reset. Backwardation. Spot prices are higher than futures, signaling physical shortages. Inventory drawdowns. Key trading hubs like London are seeing shrinking silver inventories. Rising industrial demand. Mines cannot produce enough to meet the growing need from tech and renewable sectors. These factors are creating what experts call a silver tsunami, a wave of pressure quietly building in the market, ready to reshape prices and investor behavior. Silver isn't just a precious metal, it's a critical industrial commodity. Its applications span from solar panels and electric vehicle batteries to AI chips and advanced electronics. This dual role, investment asset and industrial necessity, gives silver a unique advantage. When industrial demand rises alongside investor interest, you get a rare combination that drives both price and scarcity. The surge we're witnessing isn't just market speculation. It is a fundamental shift. Silver is becoming more than a hedge. It is a strategic asset essential to the technology powering our modern world. Unlike gold, silver supply cannot quickly increase when prices rise. About 70–80% of silver is produced as a byproduct of mining other metals like copper and lead. This means even if prices soar, mines cannot easily produce more. Additionally, geopolitical factors, mining regulations, and labor constraints further limit supply. With industrial demand growing and investor buying surging, the market is experiencing structural tension. This imbalance between supply and demand sets the stage for rapid price spikes, making silver one of the most volatile yet potentially rewarding assets in the financial world today. While silver's rise is impressive, it's important to remember that this market is highly volatile. Unlike gold, silver can swing dramatically. Gains can flip into sharp corrections within days or even hours. Short-term fluctuations are a natural part of the silver market, driven by investor sentiment, geopolitical events, and speculative trading. Even during strong bull runs, price pullbacks can be severe. Investors must approach with caution. The potential rewards are huge, but the risks are equally significant. Understanding the dynamics of volatility is key to navigating this silver tsunami safely. If silver enters a structural bull phase, breaking past key resistance levels like $80–100 per ounce, the effects could ripple far beyond the commodity markets. A rising silver market could influence currency valuations as investors shift from fiat to hard assets. Reposition precious metals as central stores of value in uncertain economic times. Impact industrial and tech sectors, where silver is critical, affecting global supply chains. Some strategists warn that this could signal a broader financial reset, where traditional fiat dominance is challenged and hard assets like silver play a more central role in global wealth preservation. This is the essence of the silver tsunami, a market shift that could fundamentally alter how we perceive and store value. Silver's current rally is more than a short-term price spike. It has a story of supply shortages, rising industrial demand, and renewed investor interest. Bank of America's $65 target is just one waypoint. The bigger picture suggests that structural market changes could be unfolding, signaling a potential financial reset for commodities and hard assets. For investors and watchers of global finance, this is a crucial moment. Understanding why silver is surging, the risks involved, and its broader economic impact can help you make more informed decisions in an unpredictable market. The silver tsunami isn't coming, it's already building, and the wave is ready to reshape markets, wealth, and global financial strategies. Subscribe now to stay ahead of the silver tsunami and the next financial reset.